Officen from proCFO again. Today I want to explain how do I calculate my gross profit or my contribution margin. This is actually something that a lot of small business owners don't fully understand. So I'll just run through a few basics and then the relationship between that and how you set your pricing, and it might demystify a few things for some people. So essentially, when you look at a set of financial statements, you'll see the top line will always have sales or revenue or your income essentially, and then usually you'll see a line or a set of lines called your cost of goods sold. So your sales less your cost of goods sold equals your gross profit in dollars. That's often nowadays called gross contribution. Same thing, just a different terminology. So essentially, if a business had sales in a quarter or a year of $450,000 and it cost them $300,000 to buy or acquire or manufacture those items, their gross profit in that period would be $150,000. Okay. Now the way we do the calculation on the gross profit margin is simple. Year 10, maybe it's even earlier than that, mathematics. So it's essentially your gross profit dollars over your revenue multiplied by 100 to convert it to a percentage, and that gives me 33% being my gross profit margin in percentage terms. Okay. What's often not well understood is the relationship between how the pricing is set and how the margin comes out of that. So an item that might cost $100 to buy, and you might make a decision to mark it up by 50%. So markup and margin are two different things. So an item that costs $100 to buy and you mark it up by 50%, you're marking that item up by $50 obviously. It sells for $150. Yet when we take this calculation from these numbers, an item that sells for $150 and costs me $100 gives me a gross profit margin or gross profit of $50. $50 as a percentage of the sell price of $150 is 33%. Now a lot of people find that very confusing and can't understand the relationship. But I mark up my products by 50%. How come my margin's only 33%? That's the reason why. The contribution margin or your gross profit margin is very different to your profit markup.